everyone. My name is Promise Obasoha, and I have with me here.
Doris Machuko.
Okay, and today we're going to be talking about some common myths that are associated with investing. You must have heard of some of these myths before, and they can be as a result of fear, misinformation, or an idea you had from the past. So today we're here to set the record straight and help you make better financial decisions and choices. So to begin with, the first myth we're going to be talking about today is that investing is only for the wealthy. So Doris, what do you have to say about that?
I think people that still believe that they have to, have millions of naira in their accounts to invest when I think Nigeria or even the financial market now have a lot of inclusive products where people get to invest with as little as 5,000 naira. We have a range of products in the market, and you necessarily don't even have to wait till you start earning huge amounts of money to invest. And truly, starting your financial goal, it's achieving your financial goal rather, just starts with the little things, the little amount, and most especially to be very diligent about saving. So, yeah.
So just like I said, right, you have to begin as little as possible. Here at Imagine Africa, we have investment opportunities for you that you can begin with as low as 5,000 naira. So it's just about starting small and being consistent with it. So the second myth we're going to be talking about is that high risk always equals high return. While this is true, I believe that before you are able to take that position to say, oh, you want to go for high risk investment, you need to be sure for what you're doing. First of all, you need to understand your risk preference. For example, if you are someone that you are a risk lover, you might want to go for high risk investment, and you need to understand what you're doing, do your thorough research, seek professional advice, and then you also need to find a balance, right? What do you think, Doris?
Uh, for this particular one, I think I remember 3 years ago when I, started consciously investing. I started with stock. Then when MTN did like the IPO
Yeah, the
like 2, 3 years
IPO.
ago, and my colleagues were like, "Oh, they've made this huge amount of money and all of that." I'm like, "Okay, let me do." And I put all my money in stock.
Bandwagon.
Guy, I think after 2 weeks, I almost cried because my
Wow.
heart was beating. I was
Wow.
seeing that my investment was the decline was the red was very
It
deep,
was red.
right? It was very red, and I was very scared, right? But I got to understand that, to be fair or to be honest, when you want to start, finding a balance is very key. You cannot put all your eggs
In
in
one
one
basket.
basket. And the truth about it is that those investments that have very high returns, as we think like stock, right, could also, you can also lose very huge amount of money in a very short period of time. So diversifying your portfolio, putting your money in a range of products like stock, bonds, mutual funds and all can help you. So even though one is not doing well, the other one can easily cover up for it. Yeah. So I think that's my take on that.
Okay, so diversification is very key. You need to find a balance, and I would say in a market like Nigeria, where the market is really, really volatile,
Very.
and you have factors as something like a change in government policy can really affect the value of your investment. So you need to be sure that you know what you're doing before you're going into such a risky asset like stocks, right? So the third myth that we're going to be talking about is that bonds are safer than stocks. What do you think?
Bonds. So the thing
Is that always
about
true?
bonds is, even though bonds provide, stable cash flow, you get your biannually coupon payment, and then you are almost sure of your principal. But things could go wrong because
True.
this is sort of like loaning people money, right? And the issuer could have issues. So imagine, for instance, a big corporate firm, issues bonds, and after some time they go bankrupt. Maybe they issue bond for 5 years and you're investing, and after maybe 2 years down the line they go bankrupt. What then do you do? All your money is practically gone, right? So even though bonds are a bit stable in terms of return, I feel like stock are volatile, but investing in companies that have very high growth values are very key. So even though they fluctuate over time, you are very sure that, in the next 2, 4 years, this company might, make huge amount of profit, and it will turn around. That's why when investing, you also need to look long term.
Yeah.
focusing on long-term
Very true.
investment is very key, and not just,
Very.
investing for 2 years or maybe 1 month and you're getting 10% like when the MMM came out then, right? Yeah.
Yes. So you need to be sure that you know what you're doing and you're not going into the market for. If you are going in for the short term, be sure that you understand the dynamics of how the market works. Just like Doris mentioned, you have to be focused on fundamentally sound companies, because as much as the equities market is volatile and things can change and affect the value of your investment, the same thing goes with fixed income too, because a change in the interest rate by the central bank can alter the yield you are getting on your investment. The financial health of the issuer can also affect the value of your investment. So you need to think long term, right? You need to think long term. I think this takes us to the final myth we'll be talking about, which is you need to if you need to time the market.
We can always time the market. Timing the market. Well, maybe 5 years ago, 6 years ago, when things were a bit stable, imagine dollar growing last year from almost 700 and currently dollar is around 17 going to 18. Exactly. And the truth about this is that we're not even sure where it's heading to, whether it's coming down or it's going up, right? So we have a lot of political policies change here and there, exchange rate fluctuation, and it's becoming so difficult for even analysts to, to forecast, because you can't even really predict what will go on. Imagine just last month or maybe almost 2 months ago, we were buying fuel at 568 at NMPC. Currently is around 1,000, 1,050 naira. And the truth about it is that I was coming to work this morning and I saw one very big filling station. Said as of yesterday they were selling at 1,050 naira, and I passed today is 1,090 naira, and we are not even sure if that's the final price, right? So you can't really, for now, really time the market. You really say, I will enter and buy MTN shares at 100 naira and tomorrow it's going to go to 200, because you don't even know what will happen. That 100 naira can become 50 naira tomorrow. So even the most seasoned investor currently can't really, it's almost impossible to time the market currently, yeah.
So just like she has said, you have to make sure that you are very, very keen on what you're doing, right? So being able to time the market is not something that you can easily do, especially for a first-time investor. So you have to make sure that you are putting your eggs in the right basket. If you need to seek professional advice, you seek professional advice. So we here at Emerging Africa, we can offer you this financial service. We can offer you this professional service rather. And of course, we're here to make your financial goals a reality.
I think when it comes to investing, right, the first things first is, I know a lot of people jump into investment because my friend is investing in stock and they're making money. I made that mistake a lot when I started investing. I will hear that, somebody's telling me they bought MTN shares and currently it's maybe at 150 and it's 200, and I'm like, let me rush and put my money because it might grow, and I end up making loss. So first of all, before you invest, I'm not saying you should be 100% knowledgeable about the product, but at least, make efforts to learn and understand what the product is. Yeah, so you're hearing about money market, mutual funds, and you don't even know what mutual fund is, because they just tell you make like maybe 21% or anything. You're like, let me put my money, but you don't want to know how the mutual fund market works, right? You don't want to know it like a pool of fund of different people and all of that. So it's important that you try your best to at least learn about the product you're investing. Information is everywhere now. You can easily pick up your phone and Google what money market is, what bond is, and you are enlightened. And we have Imagine Africa, where we have seasoned professionals that can advise you well on how to invest your funds, invest your money, and achieve your financial goals at the end.
So I think at this point, conclusively, I would say that don't just hold back and say, first of all, I need a lot of money to invest. Start small. That 5,000 naira that you're going to put in today, if you do it today, you do it tomorrow, you do it the day after tomorrow, you do it, let's say, 4 times in a month, which is every week, it's going to amount to something. So the idea of wealth creation does not begin with, I'm already there and I started. It begins with you now. What do you have now? You can take advantage of compound interest, and you see growth over time. So start no matter how small. Starting small is better than not starting at all. And we here at Emerging Africa, we have various financial services that we can offer you, various financial products rather, that we can offer you. And we're here to make your investment and financial goals a reality. Thank you.
Thank you.